All right, let's get right into it. Today, we're tearing down a technical analysis report for Central Electric Group. You know it as ticker CENN. And there's really only one question on everyone's mind. Is this stock a falling knife you should stay away from? Or is it a coiled spring just waiting to bounce? Let's see what the data has to say.
I mean, that's the million-dollar question for any trader or investor, right? And look, nobody's got a crystal ball. But technical analysis, it's all about using price and volume to find clues, to find a story in the charts. So for the next few minutes, we're going to put on our detective hats and see what story CENN's data is telling us.
And you know what? We're going to start with the conclusion. Let's just cut right to the chase. The report's overall take is pretty blunt. The stock is in a really strong downtrend. But, and this is a huge but, there are these little glimmers of hope in the data. Things that suggest a reversal or at least a short-term bounce might be in the cards. It's that conflict that makes this so interesting.
So let's break down that central conflict, the one that's laid out right in the summary of this report. It really is a classic tug of war, you know? You've got this overwhelming negative pressure on one side and just a few kind of stubborn positive signals on the other. And this slide really lays it out perfectly. In one corner, you've got all the heavy hitters for the bears. The price is way below its long-term trend lines, momentum is negative, it's not looking good. But then, in the other corner, you have that glimmer of hope. A few key indicators are flashing this oversold signal, which, as you know, can sometimes be the first sign of a rebound.
Okay, so first let's talk about the bear case. Why is the report so convinced about the downward trend? What are the specific red flags that are just screaming bearish?
First up on the list, moving averages. Now, the easiest way to think about these, if you're not familiar, is to picture the stock price as a little boat floating on a river. The moving averages, that's the main current. And if your boat is way below that powerful long-term current, well, you're getting pulled downstream. And yep, the data here totally backs that up. You can see that while the really short-term averages are kind of close to the price, the medium and especially the long-term ones are way above it. To an analyst, that says this isn't just a bad week or a bad month. This stock is fighting against a very powerful, very established downtrend.
All right, next we're going to look at a momentum indicator called the MACD. Now, don't worry about the fancy name. All you really need to know is that it helps traders see if the stock's recent momentum is picking up speed or losing steam.
And for CEN, the MACD is telling a very similar story. The main line is below its signal line, the histogram is negative. For a technical analyst, these are just textbook signs of bearish downward momentum. So that's another big check mark in the downtrend column. Okay, but remember that twist I mentioned at the beginning? Well, this is where things get really interesting, and frankly, a little more complicated. Let's look at the indicators that are sending some confusing, mixed signals, the ones creating that potential for a rebound. To understand this, we've got to talk about the Relative Strength Index, or RSI. I like to think of it as an energy meter for a stock. It basically tells you how fast and hard the price has been moving. And when that meter drops below 30, it's often a sign that the sellers are getting exhausted. They're running out of steam. So, now look at this number from the report. CENN's RSI is sitting at 21.26. Whoa, that's not just a little bit below 30. That is deep into what analysts call oversold territory. And this right here is the crucial point. This super low RSI score, it is the #1 bullish signal in this entire report. It's the strongest piece of evidence suggesting that the sellers are just getting tired, and the stock might be getting coiled up for a potential bounce.
But of course, it's never that simple, is it? The report points out this really interesting conflict. While the main RSI is screaming oversold, a related, more sensitive indicator, the stock RSI, is actually saying it's overbought, and that can be a warning that any tiny little bounce is already running out of gas. It's a perfect example of how different tools can give you conflicting short-term signals. Now, just to add another layer of complexity, the report also looks at a different type of stochastic indicator, and that one's reading is also deeply oversold. This is what leads the report to say, point blank, that there's potential for a bounce. See, we have multiple indicators all pointing to this same oversold condition, which is what's creating all this tension.
So, with all this conflicting data, what's an investor to do? What does the report say is the path forward? What are the really key levels and strategies that this analysis says we should be watching?
Well, the whole analysis really boils it down to these 3 key price points. You've got support down around 13 cents. Think of that like a floor that the price might bounce off of. Then you've got resistance way up at about 39 cents. That's the ceiling it's going to struggle to break through. And the current price? It's just kind of floating in no man's land right between them.
And this brings us to the playbook laid out in the report. The bullish case, the happy story, really depends on the stock holding above that 13-cent floor. The bearish case, well, that's what happens if it breaks down through that floor. So the report's strategic takeaway is basically, hey, keep an eye out for that oversold bounce, but maybe be really cautious about any long-term positions until the stock can prove it has some real strength.
And just to be crystal clear, the report does not pull any punches about the risks here. It is packed with red flags. For instance, it highlights extremely high volatility. It points to a severe recent price decline. We're seeing signs of distribution pressure from negative volume flows. And finally, another indicator, the ADX, basically confirms that this isn't some weak trend. It's a powerful, established downtrend.
So that leaves us right back where we started, with the ultimate question posed by this entire technical report. You have this absolute mountain of data pointing to a continued, powerful decline, and yet you have these persistent little whispers in the numbers, these hints of an oversold condition that could trigger a sharp rebound. So which is it? Is CNN a falling knife that you definitely don't want to try and catch? Or is it a coiled spring, just waiting for the right moment to snap back? The data gives us the clues, but the final answer, well, that has yet to be written. Thanks for tuning in.